big banks, such as Standard Chartered, are reporting their earnings at the Kenyan market this week. And as you'll see from this conversation, you'll notice that these numbers begin to mirror what happened in the economy. George Bodo is the director at Callstreet Research Analytics, and is joining me for this deep dive on the markets. Good to see you, George.
Good evening.
I love earnings season, especially when banks are reporting. How are the big lenders, such as Standard Chartered, reporting today? George.
Yeah, so the big boys that have so far reported, we are seeing a decline in earnings quarter-on-quarter basis. Last week we had the two big boys, the two largest balance sheets, Equity Bank and KCB, reporting a decline in EPS quarter-on-quarter basis, both quarter-on-quarter and year-on-year. Equity Bank, the likes of Equity Bank, reporting EPS down almost north of 50%, KCB north of 50%. Quarter-on-quarter and year-on-year also significant decline. But I think the key point for me, the results that I think they still do not reflect the risk environment, in my view. I think that there is my view is a bit controversial, but I think they still I can see some element of risk understatement, and specifically credit risk understatement. And I saw that even in quarter one, when banking sector net profitability was only down 11%. But by quarter one, my argument was that by quarter one, in mid-quarter one, by the way, Kenya shut down its economy fully mid-March. And I think that by the second half of quarter one, which is the second half of March, which is the last month of the quarter, I think a number of these risks had already crystallized. And I think banks by that time could actually see that they can start discounting future cash flows from the financial instruments back then. But still, I think for me, the quantum of performance in Q1, for me, I found it difficult to reconcile those performances with the risk environment Q1. I'm even having a bigger problem reconciling the performance in Q2 with the risk environment. You know what, Boason? I think banks are one of the biggest entities to analyze, because these guys are one of the best at when it comes to accounting innovation. I'm stressing myself trying to understand this performance. A number of banks have released results that are stronger than even quarter one in an environment where every credit risk has crystallized. So it's a big puzzle for me here. And I saw a research report by Investec, South Africa's Investec. They were also asking, I mean, I've never seen a research report, but it was full of questions. And they were also asking themselves, why is this? Why is this? Why is this? You know, I think the point is the fact that there is some element of risk understatement in this side of the economy. Well, in South Africa, the likes of ABSA are already giving profit warnings for 2020. Actually, they gave a profit warning for half year. And they were saying that, look, almost over 90% of their earnings are going to be wiped out by loan impairments. But here we are seeing some element of conservatism. But for these guys not being straight.
You spent a number of years being a research analyst with one of the biggest banks on the continent. So when you talk about banking research and analysis, you are someone who knows the numbers, as it were. But again,
yes, and
go ahead.
And I can tell you, it's from an outsider's perspective, it's a tough call. To try to reconcile what you're being told and what you think is going on behind the scenes.
So is it only... Go ahead.
Is that rig that was in Marina, is it still there, that there was a floating oil rig in Marina?
Yes, it's still there. Yeah, we can...
What's the story behind it?
Well, the story is that...
we can discuss that another time.
Yeah, you can. If you're interested in oil industry, you've got to get down to Nigeria. This is where you have a lot of oil in business. And of course, Lagos is an oil-producing state by now. So again, is it only Standard Chartered as is reported? What about other lenders such as the Cooperative Bank, the Equity Banking Group?
So Cooperative Bank also reported last week. By the way, they reported very strong earnings, right? They had a slight decline year-on-year. But overall, the earnings on a quarter-on-quarter basis, I looked at them on a quarter-on-quarter basis. They reported they didn't recognize any loan impairments during the quarter, which somehow for me was very puzzling. For a bank like Cooperative Bank, which is huge on the SACCOs, it's huge on retail, and it's huge on SMEs, and these are the biggest segments that have been hit by COVID-19 pandemic. I would expect such banks to significantly discount future cash flows that I expect to derive from their financial assets. But here I was looking at strong earnings in Q2, no sign of cash flow discounting, essentially management judgment was that there was no risk in the economy. I think that's a judgment that you can question.
But how is that?
And for that matter, I'm questioning those judgments.
How is an average business in Kenya affected by the state of the banks, George?
I think that, first of all, when you go back 4 years ago, when they came up with this law that said, you can only price loans up to a certain level, right? A number of businesses, especially the small and medium enterprises, struggled to get bank financing because, this is largely, the financing model in this economy is largely bank-led than capital markets driven. And now they woke up, the politicians decided last year in November, let's end this rule. And at the point when they ended this rule, the economy was already on a downdraft. And then in March, right, we had this COVID shutdown. So banks really, enterprises really, especially the small and the household, over the last 4 years, they've been starved of credit. At the point when you think that the credit creation would pick up, then you had a shutdown. And banks also shut down the credit creation. So businesses have really struggled over the last 4 years, to be specific.
So what about the Central Bank of Kenya's policies and its impact on the banks?
The policies, central policies have not been largely helpful. I call them wholesale interventions that are mainly largely meant to help banks survive. This year they came up, they cut cash reserve requirements for commercial banks. That released about, they said in their own words, that released about 36 billion Kenya shillings, which is just about $350 million equivalent into the system, which wasn't significant. But I think it wasn't going to help because already banks were already risk averse. They had already tightened the credit standards back by then, so it wasn't going to help much. So to answer your question, Boason, central bank interventions haven't helped the economy.
So talk to us about the securities lending in the Kenyan market. How real is this concern that about 6.52 billion shares pledged under the securities lending scheme could run the market into trouble?
No, I'm not really worried about that, by the way. There are two faces to it. One is that securities lending based on marketable securities, banks are very smart. These guys are very sharp. They discount them, I think in some cases up to 50%. So if your securities are worth X amount of money, they'll only give you up to half of that. And in any case, if the volatilities breach the margin requirements, then the borrower, the obligor, is asked to top up usually. This is the normal practice in financial markets. I'm not worried about that. However, there's also another face to it to the extent that the capital markets is now embracing for a securities lending and borrowing program, which ultimately will lead to short selling. Because this is something that has been the work for some time. So they've just released a regulatory framework that will allow for participants to borrow and lend securities in the market. But on the other side, in regards to the collateralization, I'm not worried because I think banks are very smart in this. They know how they cover themselves.
Mm. Okay, thank you, George Bodo of Callstreet Research and Analytics. If you're still interested in that oil rig, we can talk about that. If you wanted moved to Nairobi, we'll think about how we can do it. Or rather, you come down here and inspect the oil rig.
But just add something. Just an addendum I need to add. Cooperative Bank has finished an acquisition. Well, they were acquiring a small bank which is called Jamii Bora.
Yes.
Very small bank.
Okay.
With assets of just about $20 million. Well, the bank has been in ICU for the last 2 years.
Is that not a microfinance bank?
Yeah, well, it was originally a microfinance bank.
Yes.
But they upgraded, they became a bank. Over the last 2 years, they've had funding problems. They've been on ICU, basically on central bank support. And then eventually COP pounced on them and purchased them. its name was Jamii Bora, which means in Kiswahili term, which probably means good family. But now the name has changed to Kingdom Bank. We have a Kingdom Bank now.
I just love that. Yes. Yes, I just saw that. I just looked at it and said, what's a Kingdom Bank? And then you still have the Family Bank, by the way, which is now listed on the NSE.
Yeah, well, Family Bank is not yet listed. By the way, Family Bank is one of the banks I'm having a problem with the results. They reported 75% year-on-year growth in 6-month EPS. In an environment like this, that is a bit...
Well, George, I don't mind having a family in the kingdom. But how that works out, let's leave it for another day. Thank you so much. Have a great evening. It's about 9:45 in Nairobi. Thank you, George.